Now we discuss about accounts payable. Accounts payable is a liability account that represents the amount of a company owes to its vendors or suppliers for goods or services purchased on a credit basis. Okay, so accounts payable is a amount owed by the company to its vendors or suppliers for goods or services purchased on a credit. The company purchased on credit the goods or services. Okay, now we have to payable the amount to the vendors or suppliers. So this is the inner meaning of accounts payable, because we have to payable the amount, so that's why accounts payable. Next, it is a crucial component of the company's working capital management, as it reflects the amount of money that the company owes to its creditors. Now we go for entries. When a company purchases goods or services on credit, an entry is made in the accounts payable ledger to record the liability. Okay, so we have to accounts payable, it's a liability. The entry is credit to accounts payable and a debit to the appropriate expenses account, such as inventory, utilities, rent, etc. So we have to credit to accounts payable account, because liabilities we have to credit. So accounts payable is a liability, that's why we have to credit accounts payable account, and a debit to the appropriate expenses account, because as per nominal account rule we have to debit expenses account. Okay, such as inventory, utilities, rent, etc. For example, if a company purchases $1,000 worth of inventory on credit basis, the entry is accounts payable account debit to inventory account. Okay, actually the entry is wrong in this. Okay, we have to debit inventory account, credit accounts payable account. Okay, correct in your mind, the entry correct in your mind. I hope you understand. When the company pays the vendor, the entry reverses the credit to accounts payable. Okay, okay, inventory account debit to accounts payable account, because it's a liability. Next, when the company pays the vendor, the entry reverses the credit to accounts payable account. Okay, and a debit is made to the company's cash account. Now the entry is correct. For example, if the company pays $1,000 to the vendor, the entry is accounts payable account debit to cash account, because at the time of purchase we have to credit accounts payable. Now the liability reduces at the time of payment, that's why we have a debited accounts payable account. So as per real account rule, the cash account is credited, because the cash goes from the business. Okay, next, reversal entries. Sometimes a company may need to receive or cancel an entry that was made in the accounts payable ledger. This could happen if a vendor issues a credit memo, or if there is an error in the original entry. In such cases, a reversing entry is made to cancel the original entry. For example, if a vendor issues a credit memo for $100, the entry to reverse the original entry is So we know the meaning of reversal. So for simple understanding, we already purchased worth of $1,000. So in this example, the vendor issues a credit memo for $100. Okay, because some goods are in some defectives, we have to reverse those $100 worth goods. That's why we have to make a reversal entry. So what is the reversal entry? At the time of we made entry as inventory account debited to accounts payable account. Okay, now the liability reduces. So now what is the entry? Accounts payable account debited to inventory account. That means simply reversal the original entry. So it is the reversal entries. Next, other concepts related to accounts payable. Accruals. In some cases, a company may receive goods or services but not receive on invoice until later. In such cases, an accrual is made to recover the expenses and liability in the appropriate period. The entry is debit to the appropriate expense account and a credit to accounts payable account. So these concepts are all discussed in accrual concepts. Okay, in accruals. Next, aging of accounts payable. So this refers to the process of analyzing the age of outstanding accounts payable to determine which invoices are overdue and need to be paid immediately. This helps the company manage its cash flow and avoid late payment penalties. So aging of accounts payable also we have discussed in aging concept. For simple understanding, some creditors or some suppliers may give credit period like 30 days, 60 days, 90 days. We know that concept. So we have to accounts for aging of accounts payable, because some amounts may not even pay after 30 days also, because as per aging schedule, some amount we have to pay within 30 days as per credit policy. If some amount we may not pay within 30 days also, then we have to account for its cash flow and avoid late payment penalties. We have to if we pay late that amount, we have to pay penalties. So to avoid that late penalties, we have to account it immediately, and we have to remind we have to pay within 30 days. Okay, so this concept explained with examples in aging of accounts payable. Okay, next, vendor discounts. Some vendors offer discounts for early payment of invoices. This can be recorded as a reduction in the accounts payable liability and an expense in the period in which the payment is made. So vendor discounts. Some vendors, if you pay early, for example, the vendor gives a credit period 2 months. If we pay within a month, the vendor gives some credit discount. Some means 1% of the amount or any other percentage or some amount. So it is also discussed in separate concept. Don't worry, every concept, each and every concept of accounting, that means commerce, we have covered in detail. Okay, so today our concept, accounts payable. Okay, I hope you understand. Accounts payable is a liability account that represents the amount a company owes to its vendors or suppliers for goods or services purchased on a credit. Okay, thank you.